Today is the 20th of December 2019. My name is David Hickson, and in today's market update we're going to be taking a look at the S&P 500. Before we take a look at the markets, I must ask you to please make sure that you have read and understood these disclaimers. So in my previous market update video, which I recorded on the 27th of November, which was over here on this bar over here, I mentioned that the next interaction that I was expecting was going to be an F category interaction, in my opinion. I also mentioned that an F category interaction is usually a good short trading opportunity, but I discussed in that video why I didn't feel that it was going to be a good short trading opportunity in this particular situation, which had to do with the bullishness that we had seen in the market up to that point. So you can go back and take a look at that market update video to remind yourself of all of that. If you're interested in the detail of the FLD sequence, then please go and take a look at that video. There will be a link in the description under this video. If you'd like to get straight to a consideration of what's happening right now in the market, then keep watching. Let's take a look now at what actually happened and discuss what is going to happen next. Let's zoom in and take a closer look at what actually happened. I mentioned in the previous video on the 27th of November that we were expecting an F category interaction. And just under a week later, we did in fact get an interaction with the FLD, which I still believe was the F category interaction, in which price came down. You can see the detail of the way in which price interacts with the FLD. Price came down to that FLD on that day, on the Monday, the 2nd of December, and it found support at the level of the FLD. It then crossed below the FLD fairly strongly the next day. I also mentioned in the previous market update that I wasn't expecting the F category interaction to be a good, profitable, short trading opportunity because of the recent bullishness in the market. And indeed, this was a fairly disappointing F category interaction. The target for this F category interaction, and you calculate the target by measuring from this high price over here to the level of the crossing point, which in this case was 31.15, I think. That target was at a level of 30.72, and price on the Tuesday dropped to a level of 30.70, and so the target of that F category interaction was achieved. It was only just achieved. Generally, F category interactions carry price way beyond the target. But of course, given the recent bullishness of the market, I wasn't expecting this to be a particularly generous F category interaction. A few days later, I was asked whether that F category interactions target had been fulfilled. Indeed, it had been, and what was expected to happen next. Well, now, usually we would expect a G category interaction where price comes up to the FLD and finds resistance at the level of the FLD. And that is exactly what price did. It came back up to the FLD and it was stopped in its tracks by the FLD. And then on the Monday, as you can see, it straddled the FLD. It was up above it. And on the Tuesday, it again straddled that FLD. At this point, the question was, is this a G category interaction? Or, as I mentioned in my reply to that comment, I'm pretty sure it was a YouTube comment. You can take a look at the comments under the last market update video. As I mentioned, it was very possible that the 80-day cycle trough had formed on the 3rd of December on the completion of that F category interaction. And so that was very possibly the 80-day cycle trough that formed over there, in which case the next interaction that we were expecting would have been an A category interaction. So could we answer that question definitively? Well, if we go back in time to the Friday, the 6th of December, I think it was, we couldn't yet have answered that. At that point, it was, well, this might be a G category interaction, or we might be expecting an A category interaction. We had several pieces of information to inform our thinking at that point. In particular, the recent bullishness in the market was telling us to expect the 80-day cycle trough to occur early. Now, I can tell you there were 61 days from the 40-week cycle trough to this trough on the 3rd of December. And so we could count the bars following that. The average length of an 80-day cycle is 68 days. The recent average length, according to this analysis, is at the bottom right of the chart over here, and that is 70 days. There is the circle for the 80-day cycle trough. 68 days is the average length, and so the exact time that we were expecting that 80-day cycle trough to occur was on about the 10th of December, or perhaps the 12th or the 13th of December, I should say. Or was it possible that it had occurred a week early? Now, a week early at 61 bars is only a 10% variation in cycle wavelength, so it's not very early. Were we expecting an early 80-day cycle trough? Yes, we were, because of time translation. So the odds that that 80-day cycle trough occurred on the 3rd of December were certainly very high. So we needed to be on the lookout for an A category interaction forming. So as time passed, price came up to the FLD. Could it have been a G category interaction? Yes, certainly it could have been. Or might it have been an A category interaction? We had to be on our toes in order to correctly identify what was happening. You must never find yourself in a situation where you're saying, well, I'm expecting G, a G category interaction, therefore I'm just going to sit and wait for that G category interaction to occur. You must always be aware of the possibilities, and you can see as price came down here on the Monday and the Tuesday, it then formed, you could have drawn a little trend line over there if you liked. Certainly when price on the Wednesday pulled up above the FLD, the odds that this was going to turn into an A category interaction increased, and when price on the Thursday, the 12th of December, climbed up above the FLD and above that little trend line over there, the chances of that being an A category interaction were greatly increased, indicating that this trough over here on the 3rd of December is almost certainly the 80-day cycle trough. So now let's quickly speak about something else. At the foot of this chart, we still have a circle and whiskers for the 80-day cycle trough, and you can see that the trough on the 3rd of December is marked as being a trough of the 20-day cycle. So what's going on here? That looks wrong. We have just mentioned the fact that the way in which prices interacted with the FLD seems to indicate that the 80-day cycle trough has formed with an A category interaction where it crossed up above the 20-day FLD. And if you take a look at the Hurst signals charts, for instance, if you're a Hurst signals subscriber, you will see that this interaction has been identified as an A category interaction, even though the trough is not actually marked with the diameter of the foot of the chart. Now, the reason for that is because Sentient Trader performs a very complex analysis process. And as I've mentioned many times in these market update videos and in all of our training material, the important thing is not the positioning of the diamonds. The important thing is the positioning of the circles and whiskers, which tell us what to expect. The fact that this 80-day cycle whisker stretched all the way back to the end of November told us that it was possible that the 80-day cycle trough could have formed that early. You need to be making your trading decisions not purely on the basis of the position of the diamonds, but with a clear consideration of where the circles and whiskers are, and other considerations such as things like time translation. Are we expecting an early or a late trough? And in this case, we were clearly expecting an early trough to form. In this situation, the way in which prices interacted with the FLD has informed our analysis. Usually we look first at the analysis and then we work out the sequence of interactions, but sometimes the sequence of interactions itself can inform our analysis, which has been very useful. So what are we expecting next? Well, assuming this was a trough of the 80-day cycle, which I believe it was, we are next expecting price to come back down to the FLD. And let's in fact count the number of bars. Since there have been 17 bars. And so the next trough that we are expecting is, of course, a 20-day cycle trough. And we expect price to come down to the FLD and form a B category interaction, which is, of course, where the FLD is expected to provide support. Of course, price might not even reach the FLD because of the bullishness which is still clear in this market. And what is our longer term perspective? This is the last video of 2019, so let's look ahead and see what we can expect for 2020. Here is that analysis with, of course, our prominent trough in December of 2018, potentially a 6-year cycle trough I mentioned in the previous market update, maybe even a 9-year cycle trough, certainly a pretty impressive and big magnitude trough, as has been revealed by the bullishness of the recent price action. And so we have seen our first 40-week cycle, and we are now in our second 40-week cycle, which needs to eventually bring us down to this 18-month cycle trough in about July of next year. So looking ahead in terms of the troughs, we have a 20-week magnitude trough in late February, and we have an 18-month magnitude trough in about the middle of the year, July 2020. And let me be clear, often what I say is a little bit misinterpreted. I'm not suggesting that the market is coming down. The fact that we analyze the troughs is because the troughs are synchronized in a stock market. It doesn't mean that we're constantly expecting the market to crash and come down strongly. We are expecting another M shape, which is probably going to be a little less bullish than this first 40-week cycle M shape. So we will get something like that. It might indeed reach up to a new peak, but it is eventually going to come down to an 18-month cycle trough towards the middle of next year. I do hope you found this market update interesting and useful. I wish you a joyful and peaceful festive season, and I look forward to seeing you next year in 2020.